Guys, welcome to another video. In this video, we're actually going to be talking about the speed of reaction and also my CSD candle. And also we'll talk about the IFVG as well, right? So this is more, this has more to do with uh, entry models and whatnot, okay? So if you all are familiar with what I mentioned in the public group chat, the link is in the description down below. I said that when we see a candlestick reaction or price reaction, you want to see a 3 or 4 bar reaction, right? Like this. Why? Because that indicates speed, willingness to do something. Okay. And when you have such a thing, you know you can trust it. Okay. And you know that whenever you have this, price will always induce the candle that took out the structural point, meaning the high or the low, right? So that's that. Now, if I were to give you a few examples, I actually have an algorithm done that can do it for me. You can see this. And then we'll go into looking at what price action is doing. All right, so hold on here. Okay, so you can see that for the bearish ones, 1, 2, 3, the candle that validated structure or the validated the swing point is the inducement. There, you can see when this happens, price is going to give you a reaction 100% of the time, 100%, literally 100% of the time. Okay, 1, 2, 3 is the inducement reaction and then failed. Okay, uh, 1, 2, 3 going down. You think you missed it, but you didn't. Boom. Uh, that's pretty much it. That's how it is. Okay. Now, if you look at a bullish example, you can see that we have literally the same thing happening. 1, 2, 3 inducement, price goes up. But the algorithm does not catch some of the inducements. That's I need to fix it. But 1, 2, 3, 4, the fourth candle needs to be induced there, and price goes up. All right. Now, this same thing is applicable also to the higher time frame, meaning when we think about wanting reactions. Now, listen carefully, this is more like a lecture than a concept driven video, right? If I were to talk to you guys about, say, the daily range, say, the reaction, say, the key levels, right? You all know that whenever we have the opening range and price drives into a key level, then that's the manipulation. Meaning, make this make sense for you. If this here, we understand that the crypto candlestick, meaning the H4 candle, is still going to be from 6 o'clock to 10 o'clock, 10 o'clock to 11, 12, 1, 2, 10 o'clock to 2 o'clock, so on and so forth, based on the futures. Futures is always correct. Okay. This 4 o'clock to 4:30 opening range, right? Whether it belongs to London session or not, it is still part of that 2 o'clock to 6 o'clock uh, H4 range. So if London here doesn't hit a key level and price this is randomly going up, then this should cause a big massive sell-off to the lows. But the fact that we didn't do that means London has a key level, which is okay, which is good. That's why this is just continuously going up. So forget that. Because now when we open in this new 4 hour candle 6 o'clock over here, we don't care. Why? Because this is now opening range. This, if I take you back slowly, okay, slowly here, that the POI over there, right? Key level that is being hit is up over here. Watch closely, okay? And we have a key level down here, inverted one down there. Okay, we have an inverted one that is down there. Okay, so if I go to the 5, I see that, and I see that, okay, here's the key level. Sorry, here's the opening range. Go into this key level again because the key level can be used maximum 2 times. Price will then sell off, right? Here also, we are still within the 6 o'clock to 10 o'clock H4 range. We are faking out, and now look at the candlesticks, okay? 1, 2, 3, 4. All right. So now we have that. We know that which is going to sell off. Why? Because now we also have an inverse gap. Price induces the candle that took out structure. We induce it, hit the IFVG, and price is selling off. And the question is, Where will price sell off to? Right? Because now we're overall bullish. Overall bullish. Nothing is bearish. News came out and news is also bullish for Bitcoin. What is it that we're going to do? We're going to go here. Are you going to friggin' do, you can do this. Are you going to do this? No. This is the next key level. So I'm going to do this. You can use the opening range as a original consolidation. Say, original consolidation, raid, market maker sell model, blah, blah, blah. Here, you can use it like that. Okay. So let's see what happened. Look again, this is within the macro, right? Everything within the macro. Okay. Now we hit that key level inside of the 10 o'clock H4 range. That means that when we opened 10 o'clock here and price hits this key level, it doesn't matter anymore. Why? This key level has been used twice, so it cannot be used anymore. Therefore, this reaction is from the previous sell model. Price is coming down within the macro because the sell model has been initiated. This 10 to 10:30 opening range gets manipulated down into this key level. So when you see a three candle reaction, one, two, three, third candle took out that structural high here, this one, this third candle. You would think, okay, you know what, this is my inducement. I will see price go there and I want to see price go higher. Now what happened? It didn't do that. Okay, it forms another swing. One, two, three. You're thinking this now. My goodness, still not doing anything, right? So what are you going to do now? What you're going to do is now you're going to use an inverse gap, this, right? But the fact that price is not even coming and finishing off that sequence means that price is actually stop hunting, not this, but the candle that overlaps. Listen carefully. The candle whose low overlaps that of the one that broke structure. So that means, you see how here's a high there. See, this candle overlap, its low formation overlaps with this high. That is the inducement. You can see. Okay, you can buy over there. And then here, this is the current state of affairs. Okay, now we saw that this led to this key level, which is then leading to this reaction. So then that begs the question of, does the next H4 candle, right? Does the next H4 candle actually need a key level? Yes, why not? Of course. Right, we know we are bullish, daily bias bullish. We know that the PM session is going to be a retrace to continue, right? If I go to the futures here, right, on the futures contract, if I go to the 4 hour, and this was a big miss today, which I deleted and then happened to pan out. Feels bad, man, feels bad. Uh, okay, what to do? Uh, the on the 4 hour here, you can see that, okay, same story. We went and we hit this, and price is going up. Now at 2 o'clock, which is the next candle's opening, if we can close above here, this is the next key level, no? Here, that's the next key level. So that next key level that's happening over there, okay, the one that's happening over there. If you look at the other key, what you call it, other opening ranges, we have the 1 o'clock to 1:30. So the 1 o'clock to 1:30 opening range is here. Okay, it's here. And if we close above that H4, those H4 levels, and price goes and taps back into those H4 levels, then this candle is already inside that, and it's part of the session. So the fact that we are coming and tapping it again while this opening range is inside that is a sign that, okay, you know what? No need to go below this again. Why? Because this is going to go higher, propel higher. And this is the macro. So it will happen inside the macro. We need everything to happen inside the macro. If you're trying to trade outside the macro, what are you doing? You're going to get assaulted like bad, like mad. Okay? And always understand one thing. If there is supposed to be an inducement, let's say here. Now I showed you a lot of examples in which it didn't induce. If you go to the futures contract, okay, 5 minute chart, okay. You go to the futures contract, you can see, sorry, not that one over here. You can see I had a limit order here, right, which completely missed, by the way, in the London session. Can you see how it came back and went up? Okay. What was that from? That was from this here. This candle took out the Asian high. Boom. Why is it so precise then? Perfect, right? Yeah. So that's the way it works. So price must always do these things. These things are a must. And you are only interested in doing these things within the macro, nothing else. Okay, within the macro. If you try to go outside of the macro, chances are the probability of you failing is quite, not quite, it's extremely, extremely high. Why is that? Because the macro is specifically designed to be right. So if you consider this to be some sort of a, I don't know, freaking, uh, okay, how can I put this? Okay, um, okay, stay with me, all right? The opening, the session, and the closing. We have the open, session, close. Here, you're going to have a shit ton of volume, okay? And that volume is going to come in until around the session, and the session is more or less dead, trading inside ranges, okay? It's trading inside ranges, those small, small candles. Then suddenly you're making these big, big, massive candles, right? And then in the close also, you're going to get some massive moves, okay? So take this idea and use it with the macro. So here, 3:40 to 5 o'clock. What is that? 3:40 is just around the London Open. 5 o'clock is just around the supposed London session close. In between is the London session here. Okay. Likewise, here, 9:40 is just after the NYSE Open. Okay. That's that. 11 o'clock is 1 hour after the London close session. So it's still relative to the open, very, very close to the open, right? Now, as you move away from London close open, what's happening? It's dead, moving up, down, up, down, up, down, up, down, up, down. And then suddenly we come into the PM open here. Now we are soaring with volume. Now we're coming into the PM macro. So PM macro is at 220. So between 220 and 330, you have an opportunity. And it's going to be dead. And then towards the end of the day, it's going to start soaring. Like yesterday. Look at this. See this. This is the open. Da, da, da. Open. Okay, it goes down. Volume. Disinducement. Dead, 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 dead. Now PM macro comes. Boom. And then boom. Right? This is very important. You have the open. You have the close. The open and the close, those timings, they are key. Without them, you're just freaking playing around. And this is not something I created. This is not something I came up with. This is by the mentor of your mentor of your mentor of your mentor of your mentor, Larry Williams. Okay, the open is always the best. The close is always the best. All right, we know that for the London session, we have Frankfurt open, and then we have London session, right? So if you take this like this, here's a Frankfurt open, here's a London session, and then here's the closing hour. This is called the CH. Best place to get entries. Worst place to get entries. Best place to get entries. Okay. Then you have the New York session. What do we have? We have here, we have the New York Open, and we have NYSC, and then we have London close. So what's going to happen? We have NY Open. Okay, we got some good volume coming in and then dead. And we have NYSC, good volume coming in and then dead. And then London close, good volume coming in and then it is PM session, lunch hour. That is something that you all need to understand. The macros, my macros are designed to give you the freaking entry. I mean, look at this. Here, expansion. That's all it did. Here, expansion. That's all it did. So what to expect here? Expansion, no? Look at this. Consider yesterday's price action. Yeah? What's going on? Okay, expands. Here, boom, did two more expansion. Okay. Here, and New York session macro. Boom, expansion. Okay. Nothing. Here, boom, expansion. These are the trigger points. Here, 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 here. And you also have the other one, the 8:30 to 10 o'clock one. That's the sweet spot, as I like to call it. That's the other one. Here, 8:30, 10, boom. Macro, colors. Let's say freaking one last one. Let's go maybe random day. Random day. Okay, I can't see anything. Oh, fuck, I saw it. It's okay. Here, let's see. Okay, now we're supposed to get some spike, volatility spike. Oh, what is that? You can get in here, you can expect some trend continuation, right? Wow, holy shit. Okay. Now let's say this 8:30 to 10. Yeah. And look at this, right? We have Asia consolidation, London expansion. I mean, New York session will be reversal. So we have 8:30 10. Now we're expecting a poof. Wow. Wow. In the macro here also, okay, a bit of a jigamagic over here and then poof. And now we know that New York reversal, PM session retracement. So we're expecting a retracement macro. There, small little retracement. Still look, poof, tradable bounce. No one teaches this, buddy. Only me, but they're going to copy me, of course. But as long as you know I'm the source, okay, that's cool. Look over here. We have Asia expansion. So London, okay, whatever. Daily bias bearish. Is the Asian range somewhere here? We Asia expansion, right? So expansion. London should be a retracement or a reversal. See that? You see that? Expansion, London retracement. With retracement, of course, will come and move down, right? New York session is going to be continuation. PM session will be a retracement. So retracement will be you're looking for buys. And PM session, when you're looking for buys, those buys can ultimately lead to a complete trend change. See that? PM macro, boom, buy. How that? How'd you like that? How would you like that? This is literal perfection. Okay. See, one last example. So Asia is a consolidation, I think. Yeah, consolidation. London should be expansion. Okay, we're expanding. Then New York session will be a reversal. Should be a reversal. Boom. How about that? And now PM session should be a continuation. Boom. Go up. Go up. Yes. There you go. See, my algorithms do it all. Now, if you want the algorithms, you can definitely sign up for Trade Easy. It's only $40 per month. You can make that money back in fucking 10 minutes. All right. So with that said, I hope you enjoyed this one. I'll see you in the next one. Good luck and good trading. Bye bye.